Hello, trading is closed on December 18th, 2018. We hit a target yesterday at 25.75.78, but I said it might not print because when you're in free fall like this, that's when these things fail to print in their preferred time frame. Didn't print, we'll add it to the list. It will be seen at some time. Doesn't have to be anytime soon. These from over a year ago are on the verge of printing. When this pattern doesn't end near the highs, it's trouble, leads to lower prices. It's invalidated if we gap and promptly take out these highs. When you gap up in any pattern and close under all the early lows, that's trouble, leads to lower prices. It's invalidated if you gap and promptly take out these highs. During the day, MEJT gave a sell signal. It might look impressive. Just remember, a sell signal means lower prices will print at some time. They aren't obligated to print immediately like this. They aren't obligated to have a magnitude of a drop as big as this. It does say to you, though, if you're negative for other reasons, you don't have to concern yourself with that the move won't stick. Yesterday, we undercut the February low and promptly reversed. There's something called a 2B bottom. The theory behind it is there are lots of stops under the prior low. Everybody has market orders to sell, and once they're all taken out, all the sellers are gone. If that's what it is, we'll keep going up. And the mark's an important low. And if that's what it is, this low will hold. It won't be undercut again the way it was today. The rallies won't stop till they take out some prior highs. They won't stop short of it like this. And this rally stopped short of all the prior highs. All this means is that unless proven otherwise, you expect recent lows to fall. Now, the FOMC meeting tomorrow makes predicting market action less reliable than usual. I personally don't like to have a position when they meet. We're extremely oversold and everybody wants out. But here, this tells you the percentage of stocks in favorable patterns. Look how it's collapsed since the beginning of the month, only 2.5 weeks. It'll hit a bottom at some point. I don't see any signs of it yet. Now, being oversold near a market low is a positive. The last seller just says, get me out at any price. But near market tops, it can be just the opposite. When people say, get me out at any price, it can mean the selling is just beginning. We don't have a 2B bottom. We assume these lows are going to break, and they've been tested so many times that they'll probably break in grand style when they break. All the elements one needs for a crash tomorrow are present. Just because you have the elements for a crash doesn't mean you have to have a crash. And if the call fails because we're so oversold, it could fail in grand style. But as things stand now, there's a potential, not the obligation, but the potential for a huge drop tomorrow. I'm not going to predict how big, but if this is A and that's B, and this is acting like it's a 5-wave move down, whether it's 5 or 3, it wouldn't surprise me if wave C had a fib relationship to wave A. And if it's 1.618 to 1, you could wind up close to 2430 before the drop's over. It doesn't have to be all in one day, but I could tell you we could have 100 plus handles drop in front of us if the analysis is correct. very risky to take a position on this. The volatility here is kind of enough to give anybody fits, and it should only increase after the FOMC meets. But if we start dropping tomorrow, and tomorrow's the pattern with the early low, doesn't mean you won't gap up, but it's the pattern with the early low, just be aware that being oversold is not going to necessarily get you out of trouble. We have the potential for a crash tomorrow. And we'll see what happens, and that's today's call.